this market?
Very well.
Can it continue?
More likely than not, it's going to continue because right now the retail money is not coming in just yet, right? So right now it's mostly institutional money, and also this year, if you look at how the retail deposits in the banking system has been rising, right? So year to date we have more than 5 trillion yuan new deposits coming in from the banking system, right? So that sort of bodes well for the liquidity in the market. And I think normally when a bull market happens, firstly you have the institutional guys coming in, and then towards the second half of the rally, then you will have the retail money participation. And right now we're not seeing, probably 20% of the market is retail money, so the retail money is not participating at a very mass scale, and therefore I think more likely than not the rally would continue.
Should we be concerned that margin debt is back to levels that we haven't seen since 2015 then, right before things collapsed?
I think we should feel encouraged to see margin debt rising. The reason being, for the longest time, we haven't seen this kind of risk appetite coming back to this market. And if you look at official numbers, for example, Chinese consumer confidence is still at decade low, right? So it hasn't rebounded since 3 years ago, since we come out of COVID.
Yeah.
So for the market to rise further, we must know that firstly there's no fundamental support, right? So fundamental is really bad, and I think the market is betting the authority to come in to sort of execute some sort of stimulus policy like it did in last September, and to sustain the rally. And I think right now, the sort of the calculation for the authority really is that because the property market is so bad, and we need some sort of an asset price rising to sort of pull the consumer confidence out of the valley, right? So out of the low point, and so therefore I think come September, October-ish, then we should see some more details on policy front.
Is this also a chase for yield? We've talked about how insurers are going into the equity market as a big buyer there. We're seeing this recent melt-up in bond yields, and I wonder where people are. Do you think investors are switching from fixed income back into the equity markets?
Well, at least right now, if you talk to the fixed income guys, right, so they call themselves fixed income plus fund manager.
Okay.
Right?
Yeah.
They want to re-identify themselves as an equity.
Yeah, cross assets.
Yeah. So you can see how bad it is for those guys. So the bond market has been rising for like 3 years now, right? So they had a tremendous bull run. Chinese long-term bond yield is still at decades low.
Okay.
So therefore, I would say that we would continue to see money rotate from bonds to stocks.
Tell us, you mentioned that this rally can actually broaden a bit, right? Are you seeing it spread out beyond just the mega caps right now?
I think so.
And the banks.
That's right. So in the first half of this year, right, so we did have a bounce because of DeepSeek. And back then, if you look at the names that is rising, the Tencent, Alibaba, and the like, right? So those are very familiar names that people are very used to. But right now, every day you're seeing very strange names coming up, some names that you've never seen before. And also, if you look at the new tech board, the Beichuan Wulin, and also the China export, they're rising substantially faster than the main board. So that is telling you that the rally is actually spreading out.
Can liquidity alone be enough to fuel this even further? Or at some point, we'll need to look at fundamentals. And do you think at that point fundamentals will slightly be better than the current state?
That's right. I would say that liquidity can let you go so far, right? So right now we are very close to 3,800 points, a level that we haven't seen for 10 years, and so Hong Kong is closing in 26,000. Also a level we haven't seen for 10 years. So I think from here onwards, for the rally to sustain much further from here, then we really need to see some policy support. Because if you look at the fundamental, there's no reason for you to be bullish on this market.
What about earnings?
Earnings so far has been resilient, I have to say. Right? So even though the larger cap names, giving some sort of mediocre performances, but I think if you look at the smaller cap names, they're actually giving very good results. And also if you look at the names, the earnings, the stocks that's been doing well this year, right? So new consumption names, for example, the CXO names, and also some of the robotic industries that we haven't seen before, that is sprouting sprouting up this year as well. So this rally is actually, it's being led by, many of these new sectors that we haven't had before. And if you look at the past bull markets in Chinese history, so every bull market, they will have a leading steers, to lead the market up. So in 2007, it's the big banks and big financials and big SOEs. I think in 2015 it was the China export, and I think right now we're getting into an era where we see the new industries that probably have a very low representation in the index, but their earnings is actually rising. Their importance and also they're occupying investors' focus, and I think more likely than not, this bull market will be continued to led by these names.
What do you think of biotech? I mean, you mentioned there are new sectors that are leading the rally that we haven't seen, and biotech's been a fantastic long this year, right? Yeah. Do you think that continues? Do you get questions around this?
Yeah, I would say that this sector should continue to do well. Reason being, well, if you look at some of the names, they're up like 10 times already year to date. It was just phenomenal. And I think reason being, these names have been really beaten down in the past 2 years. People just sort of written it off. But then come this year, people starting to see the R&D efforts that they spent in the last couple of years is coming to fruition. So many of the biotech companies actually giving out good results, and some of them actually forming joint ventures, being acquired by foreign players and all that. So that is telling you that this sector is actually sort of coming back to life. And also China actually have a comparative advantage in this sector in the sense that the cost is really low. Right, so the cost to do all sorts of experimentation is very, very, very low for Chinese companies. And so I think all in all, one shouldn't be too surprised to see, because this is a new sector, it aroused the imagination in people, and shouldn't be surprised to see, this sector continue to do well.
Sorry, very quickly, one last thing. The pickup in HIBOR this week, does that have any lasting implications, you think? I think we were up the most in 17 years, something like that on Monday, from a low base.
Yeah, very, very low base.
Yeah.
And also is, the money that is coming from mainland and also some fund flows coming into Hong Kong from overseas is making the HKMA's life difficult. So I think many of the investment banks in Hong Kong is actually offering people some structural product to take advantage of the situation where you're still seeing a huge interest rate spread between US dollars and Hong Kong dollars. So because of that, there has been selling pressures on the Hong Kong dollars, and now people sort of coming back to senses. And so people shouldn't be too sort of concerned about the surge in HIBOR.